Traditional finance, TradFi versus Web3. What's the difference? What is TradFi? What is Web3? Have you ever wondered what the real difference is between traditional finance and Web3? You've probably heard people talk about crypto, blockchain, DeFi, or how banks might one day become obsolete. But what does it all really mean? Let us break it all down in a simple way so you can understand both systems and why Web3 is such a big deal. Let's start with who controls your money. In traditional finance, what we often call TradFi, your money is managed by central authorities like banks, governments, and credit card companies. If you want to send money, open a loan, or invest, you usually go through one or more of these middlemen. You have to trust them to do the right thing, follow the rules, and protect your money. Now in Web3, the power shifts. Instead of relying on companies or governments, you use something called a blockchain, which is basically a public digital ledger that records transactions across a network of computers. It's decentralized, which means no single person or company controls it. Everything runs automatically through smart contracts, which are self-executing programs written in code that carry out transactions when certain conditions are met. No bank manager, no approval forms, just code. So, instead of trusting a person or a company, you trust the code. Let's talk about access. In the traditional system, you usually need a government-issued ID, a bank account, sometimes a credit score, and your access can depend heavily on where you live. For many people around the world, this makes basic financial services almost impossible to get. But in Web3, all you need is an internet connection and something called a crypto wallet, which is like a digital version of your bank account that you control yourself. No permission needed, no paperwork, and no one can block you from using it. Now, let's talk about the technology behind both systems. TradFi still runs on older infrastructure, like SWIFT for international transfers, or ACH for domestic payments. These systems were designed decades ago, and while they work, they're slow, expensive, and not very transparent. Web3, on the other hand, uses blockchains, smart contracts, and decentralized apps, called dApps, built on open networks like Ethereum, Solana, or others. These platforms allow developers to create financial tools that are more accessible, faster, and open to anyone. For example, if you want to send money to someone in another country using TradFi, it might take days and cost you fees. In Web3, you can send a cryptocurrency, like Bitcoin or USDC, a stablecoin that's pegged to the US dollar, and it'll arrive in seconds or minutes with lower fees, no matter where the other person lives. Of course, both systems have their own risks. In traditional finance, the risks include things like bank failures, fraud, or financial crises, but the system is heavily regulated. If something goes wrong, there are often protections in place, like deposit insurance or consumer protection laws. In Web3, things are different. Because it's decentralized, you're responsible for your own security. If you lose access to your wallet or fall for a scam, there's usually no one who can help you recover your funds. Also, smart contracts can have bugs, and hackers can exploit vulnerabilities in platforms. That's why it's important to be educated and careful when using Web3 tools. Let's look at the kinds of financial services each system offers. TradFi offers things like savings accounts, loans, insurance, investment platforms, and payment processing. But these services are often available only during business hours, can be restricted by location, and usually require some form of approval. In Web3, you can do many of those same things, like lending, borrowing, trading, and earning interest, without needing a bank or a broker. You just interact directly with protocols like Aave, Compound, or Uniswap through your crypto wallet. Plus, it's all available 24/7 with no middlemen. And Web3 introduces new services that don't really exist in TradFi, like staking, where you earn rewards by helping secure a blockchain network, yield farming, earning interest by providing liquidity, and even NFTs, unique digital assets that can represent anything from art to access passes. Now, who makes the decisions in each system? In traditional finance, decisions are made by executives, shareholders, regulators, and centralized boards. Most users have no say in how the system is run. In Web3, many projects are governed by something called a DO, a decentralized autonomous organization. This means decisions are made by the community, usually by people who hold a specific token. They can vote on proposals, make changes to the platform, and guide its direction. It's like owning a piece of the platform you use. Even the core values behind each system are different. TradFi is based on trust in institutions and focuses on profit, regulation, and stability. Web3 is built around open access, transparency, and the idea that code should govern systems, not people. Now, both systems have their challenges. Traditional finance deals with outdated tech, slow transactions, and financial exclusion, especially for people in developing countries. Web3 is still young. It faces issues like scalability, complex user experience, regulatory uncertainty, and security vulnerabilities. To make this more concrete, let's compare some real-world examples. Payments. In TradFi, you might use Visa or PayPal. In Web3, you can use Bitcoin or stablecoins. Lending. TradFi means going to a bank or credit union. In Web3, you can use platforms like Aave or Compound to lend and borrow directly. Trading. In TradFi, you use platforms like Robinhood or the New York Stock Exchange. In Web3, you use decentralized exchanges like Uniswap or DYDX. Fundraising. TradFi relies on IPOs and venture capital. Web3 uses ICOs, initial coin offerings, IDOs, initial DEX offerings, or DAOs to raise funds from the community. Asset custody. In TradFi, your bank or broker holds your money. In Web3, you hold your own assets in a wallet you control, sometimes with added security like multi-signature wallets, where multiple people must approve a transaction. So let's quickly sum up the strengths of each system. TradFi is secure, familiar, and comes with legal protections, but it can be slow, expensive, and inaccessible for many. Web3 is fast, global, and gives you control and ownership. But it's still evolving, and you need to be more cautious and informed when using it. The truth is, neither system is perfect, but understanding both helps you make smarter financial decisions in today's changing world. If you found this video helpful, give it a thumbs up, subscribe, and hit the bell so you don't miss more videos on crypto, finance, and the future of money. Thanks for watching, and I'll see you in the next one.